Today is the 20th of June 2022. My name is David Hickson, and in today's market update we're going to be taking a look at Bitcoin, which made headlines over the weekend because of the important price level to which it fell. Before we take a look at the markets, I must ask you to please make sure that you have read and understood these disclaimers. So here is a chart of Bitcoin, and of course the important level to which the price of Bitcoin fell over the weekend, I think it was on Saturday morning, was the high of December 2017 at about $20,000. And as you can see, price has dropped down a little bit below that level. So it has touched a level which was, of course, previous resistance. And very often previous resistance levels turn into support levels. And so this is an interesting moment for Bitcoin, which is why I thought we should take a look at it. This is the analysis that we've been looking at in Bitcoin in recent market updates. And if you haven't seen them, I would encourage you to go back and take a look at those previous market updates so that you can understand the bigger picture. But here is a quick recap. I have been discussing the fact for some time that a very important peak formed. I think that was in November of last year, and that was a peak of 54-month magnitude, so a really important peak. The previous 54-month magnitude peak that we experienced was, of course, the peak in December of 2017 at the level of about $20,000. And so the bigger picture in terms of Bitcoin ever since November of last year has been that price is dropping out of a really important peak, a 54-month magnitude peak. So when price drops out of a 54-month magnitude peak, we do, of course, expect it to fall. Why am I speaking about peaks, whereas when we take a look at stock markets, I mostly speak about the troughs? That is because Hurst, when he initially discovered the principles that form his cyclic theory, performed analysis on US stocks, and he discovered that the cycles that influence stock markets are synchronized at their troughs. There is some evidence that other markets are actually influenced by cycles that are synchronized at their peaks. It is not something that Hurst ever mentioned, but over the past 50 years, it is a subject that has often come up, and I have discussed it previously. Some instruments, such as precious metals, gold, for instance, are very clearly synchronized at their peaks, it would seem, and Bitcoin is an instrument that is interesting because we don't know whether it should be influenced by cycles synchronized at their troughs or at their peaks, or rather whether it should be analyzed on the basis of cycles synchronized at their troughs or at their peaks. And so I do both. This is what we call a dual analysis. We have a trough analysis at the foot of the chart and we have a peak analysis at the top of the chart. There have been periods of time when the trough analysis in Bitcoin has been remarkably accurate. But recently, as I've mentioned in the past few market updates about Bitcoin, the peak analysis has, in my opinion, been much more accurate. And so I am tending to favor the peak analysis. Nevertheless, I keep an eye on the trough analysis because even if the cycles are not synchronized at their troughs, the trough analysis can give us some useful information, just as a peak analysis gives us useful information when analyzing an instrument that is synchronized at its troughs. In particular, the thing that I would like to call your attention to now in terms of the trough analysis, let's just zoom in here so that we can get a slightly more detailed picture. The interesting thing is that Sentient Trader hasn't positioned a trough of the 54-month cycle. You will see the 54-month cycle, as I've already mentioned, in the peak analysis, but you don't see it in the trough analysis. The reason for that is because Sentient Trader doesn't really have quite enough information to confidently position the trough of the 54-month cycle. But that's because Sentient Trader is being a little bit cautious. In my opinion, the 54-month cycle most probably occurred over here in December of 2018. And so we had a move from a 54-month cycle peak down to a 54-month cycle trough, which was, of course, the big decline from December of 2017 down into December of 2018. And so if that was a trough of the 54-month cycle, then we have seen one 18-month cycle elapse up until March of 2020, then a second 18-month cycle into the low price of June 2021, or possibly July 2021, as I've discussed in previous market update videos. And so we are now in our third 18-month cycle. The third 18-month cycle, of course, ends simultaneously with the 54-month cycle trough, because there are three 18-month cycles in each 54-month cycle. I've been discussing a very similar situation in stock markets recently, pointing out that the third 18-month cycle is often a very bearish cycle. And that has certainly been the case in Bitcoin, because here is the cycle shape, the M shape of the third 18-month cycle. And so in cycle terms, the reason for the recent downward move is that price is dropping out of a 54-month cycle peak, and it's heading down towards a 54-month cycle trough. How far has it reached towards that 54-month cycle trough? Is it possible that 54-month cycle trough occurred over the weekend? Let's zoom in and take a look. As I've mentioned, the peak analysis is more reliable at the moment in my opinion, but if we take a closer look at the trough analysis, we can try to determine whether it is possible that the trough that formed over the weekend is in fact the really big trough that we're looking for. I think it is very unlikely. Here is the analysis. As you can see, we had an 18-month cycle trough that formed in June of last year. If we measure the number of bars since that trough, you can see there have been 364 days, so about a year since that trough formed. Now we could debate the exact position of this June trough, as I mentioned earlier, because there were various potential positions for that trough. But nevertheless, only 1 year, or a year and a month, or a year less a month since that trough formed is a bit early for an 18-month cycle trough to form. As you can see from the whisker, which is this line that extends to the left-hand side of the circle, marking the position that we expect the next 18-month cycle trough to form in the market, we are just about entering the minimum reasonable time at which this 18-month cycle trough could form. But it is, in my opinion, premature. Here is the nest of lows for the 18-month cycle, which I've mentioned is possibly also a 54-month cycle trough. And you can see that is in about October of this year. And so it is very probable that the trough that we are looking at forming now is a trough of 20-week magnitude. We can measure the lengths of more cycles. There was a prominent trough, as you might remember, in January of this year, and if we measure the number of bars since then, you can see there have been 148 days since that trough formed. Again, much too short for a 40-week cycle, and only slightly long for a 20-week cycle, increasing the chances that the trough that we're expecting to form now is of 20-week magnitude. But the trough analysis, as I've mentioned several times, is not as reliable as the peak analysis, and so the trough analysis is likely to change and shift a little bit as we experience the price action. What has been much more reliable is the peak analysis. So let's focus on that peak analysis for a moment. Here is the 54-month cycle peak that formed in November of last year, and if we measure the number of days to this 20-week cycle, you can see that there were 138 days that elapsed. The average length of a 20-week cycle that Hurst discovered 50 years ago is 136 days, and so that 138 days is a remarkably accurate 20-week cycle. Following that 20-week cycle peak, if we measure the number of days to this 80-day cycle peak over here, you can see that there were 70 days. The average length of an 80-day cycle, discovered by Hurst 50 years ago, was 68 days. So again, we have a very accurate 80-day cycle that formed. Now you will notice this nest of highs for the 40-week cycle is a little bit straggled and it's leaning over to the left. Is it possible that the 40-week cycle peak occurred over here? It is possible because there is the whisker for the 40-week cycle peak. But it is still my opinion that we are going to experience a bounce out of a trough that will probably prove to be of 20-week magnitude, and that bounce will take us into the 40-week cycle peak, which we are expecting. This is the peak I've been discussing for some time, that we're expecting sometime in July. As you can see, as more price action has been added to the chart, that peak has been pushed ever so slightly over to the right or into the future, and so that peak is now expected more towards the end of July or even early August. But what is going to happen after that peak does form in late July or early August? Well, we do still have this very big trough looming ahead of us. And so having formed that 40-week cycle peak, price is expected to continue to move downwards into this very important trough that we are looking at forming in about October of this year. When focusing on a peak analysis, we look at the cycle shapes that form in the market, and they form W shapes as opposed to M shapes when looking at an instrument that is synchronized at its troughs. So let's take a look at the W shapes that have formed in the market according to the peak analysis. There is the W shape for the 20-week cycle. Now the next 20-week cycle has given us a move down, a move back up to this 80-day cycle peak over here. It's given us the next move down, and the final move of this W shape is this move up to the 40-week cycle peak. Of course, we have witnessed a very bearish W shape here. Is that a surprise? Not at all. We have a very big magnitude peak behind us, and that is why there has been so much bearishness in Bitcoin. So our expectation is that the price of Bitcoin is going to give us a bounce fairly soon when this 20-week cycle trough forms. It's going to then form its 40-week cycle peak at some point, and then move down, probably even further down, into this 18-month or possibly 54-month cycle trough. Is there any other information in this cycle analysis that can inform our idea of where this price is going to go? Let's take a look at the 20-week FLD. As you know, I enjoy the FLD very much because of the fairly regular sequence of interactions between price and the FLD. Let's take a look at the sequence of interactions that have occurred between price and the 20-week FLD. Following this trough of the 18-month cycle back in June of last year, price crossed above the 20-week cycle FLD in what we would label an A category interaction. It reached up and achieved its target, which is measured by simply repeating the distance that it traveled from the trough to the crossing point to the upside, and that provides us with the target. The next interaction between price and the FLD is expected to occur at about the time that the first trough of the cycle upon which the FLD is based forms in the market, following the bigger magnitude trough from which the sequence starts. That was, of course, the 20-week cycle trough, which according to this analysis occurred in September of last year. At that time, we expect price to find support at the level of the FLD, which you can see it did with some accuracy. That is labeled the B category interaction. Following the B category interaction, where price finds support at the level of the FLD, we expect price to bounce up and away from the FLD in the C category interaction, which is exactly what it did on its way to the 54-month cycle peak. The next interaction is where price crosses down below the FLD. That is our D category interaction, and that occurred in early December of last year. Price then moved down, and we could generate a target to the downside, and it fairly accurately achieved its target, and then started moving upwards. This is when the bearishness of this market became particularly apparent, because price then crossed above the FLD as expected in an E category interaction. But you can see that it failed to reach its target generated as a result of crossing above that 20-week cycle FLD. That was a bearish sign, and the market then turned down and performed its F category interaction, where it crosses down below the FLD. It achieved its target on the downside and far exceeded it, which is not unusual for an F category interaction, particularly in a bearish market, which was fairly obvious at this point because of the very great magnitude of this peak back in November of last year. So what do we expect to happen next? We would expect price to come back up towards the 20-week FLD and find resistance at the level of the 20-week FLD. I have purposefully left my previous markings of our expectation on this chart so that you can see that a very rough estimate of where price might take us actually ended up at the level of the FLD. That is pretty much what we would expect. We would then label that a G category interaction, and then would come the H category interaction for the final move down into this 18-month or possibly 54-month magnitude cycle trough. Now, is it possible that this slight move up that we saw over here in the month of May and very early June, is it possible that that was our G category interaction? It is just possible, but in my opinion, it is unlikely. What about generating some targets to the downside? Here we can use a different FLD, the FLD for the 18-month cycle. As you can see, following the 54-month cycle peak in November of last year, price crossed down below the 18-month cycle FLD, and it achieved its target at the low price over here in January of this year. Price then crossed above the level of the FLD, but generated a minimal target to the upside, which was indeed reached. Price has recently, in the beginning of May, crossed back down below the 18-month cycle FLD. Measuring from the peak that preceded that price cross down below the FLD, we can generate a target. And wait for it, it's not a very encouraging target. It is a target of about $12,000. FLDs often provide us with accurate targets, but I should point out that interaction with an 18-month FLD might not be very reliable, particularly when measured on a daily chart. When we switch to a weekly chart, you can see that the price cross of that FLD actually occurs at a slightly higher level, which then provides us with a higher target, and that target is a level of about $17,000, so a more encouraging target for those of you who are still feeling bullish or want to feel bullish about Bitcoin. We have another tool in Sentient Trader that will generate targets on the basis of the cycle analysis, and that is the Zig-Zag tool that I've demonstrated previously in these market update videos. Here is the Zig-Zag for the 18-month cycle. And in fact, if we change the scale of the y-axis over here, and let's change this to normal linear scaling as opposed to logarithmic scaling, you can see that this is presenting us with a very bleak target. It is in fact pretty much zero. But before you take that target too seriously, I should point out something interesting about the Zig-Zag tool. The Zig-Zag tool calculates targets on the basis of the fact that prices tend to move from a peak of a particular cycle, in this case the 18-month cycle, down to a trough of the same cycle, the 18-month cycle, by making three moves. We have a move down to a trough, which is the greatest magnitude trough that should be encountered on the way down to the trough of the cycle, upon which the zigzag is based. The next move, the second move, is where price moves up towards the greatest magnitude cycle that should form a peak before the 18-month cycle trough forms. And this is where this zigzag tool is a little bit deceptive. As you can see, the zigzag tool has in fact plotted the second line of the move. The third line is, of course, the final move down into our 18-month cycle trough. But let's focus for a moment on this second line over here. The reason why this target is so low is because Sentient Trader is looking at this circle for the 40-week cycle peak. And it is saying that it is just possible that this is the peak of the 40-week cycle. If that is the case, then we are going to experience a very bearish move down into this 18-month cycle trough, as indicated by this zigzag. And I think this is a really important point to make about working with the tools in Sentient Trader, or pretty much any software which is producing targets and so forth, is that you need to understand the way in which the indicator or the software is working. And the reason why this zigzag is so low is because of the fact that the software is saying this is possibly a peak of the 40-week cycle. As I've been discussing in today's video, I think that is unlikely. I think we are going to see a bounce out of the 20-week cycle trough. I also think that we are going to see a higher peak of the 40-week cycle forming. By higher peak, I don't mean another all-time high. I simply mean that price is going to move up and form a peak that is higher than this peak over here at the end of May or early June. When that happens, this zigzag tool will, of course, adjust to the position of the 40-week cycle peak. Let's assume it's at about that level over there, and that will then provide us with a much higher target for this 18-month cycle trough. Finally, let's take a look at the composite model line, which takes all of the information from the cycle analysis and it recombines that information. Here you can see that the recent price move has dropped down below the composite model line. However, as I have mentioned fairly often when it comes to the composite model line, it is the structure of the line that is more important than the actual price level. The reason for that is because the amplitudes of the cycle, in my experience, vary more greatly than their wavelengths do. And the amplitudes, of course, influence the price levels. And so you can see the composite model line is again suggesting a bit of a bounce up into a peak, that would be the 40-week cycle peak, followed by a move down into this 18-month cycle trough. Both of those tools have provided us with a useful reminder that it's important to understand how the tool works before simply accepting its projections and the targets that it is providing. So that summarizes the cycle analysis, in my opinion, for Bitcoin. Let's go and take a look at how we might form an opinion about this 20-week cycle trough that should be forming about now. The first thing we would do is step down to a shorter time frame. Let's take a look at the 4-hour chart. Here it is. Here again is the nest of lows for the 20-week cycle trough. You can see that on the 4-hour chart, the 20-week cycle is looking a little overdue. Here is the circle for the 80-day cycle, and so forth, and all of them build up to create a nice nest of lows, indicating that that 20-week cycle trough is certainly due. This FLD is an FLD of the 10-day cycle, and we can display a shorter FLD here, perhaps the 5-day FLD. What we will do as a potential trough forms in this market is we will watch as price crosses above each one of these FLDs. As it crosses the 5-day FLD, it will confirm that the trough that has formed is of at least 5-day magnitude. Then when it crosses the 10-day FLD, it will confirm a 10-day cycle trough has formed, and so forth. We can also take a look at the composite model line on this price chart, and you can see it is indicating that we are expecting a bounce out of this trough into this 20-day cycle peak over here, after which price will pull back and form a 10-day cycle trough and then continue upwards. Let's step down one more time frame to the 1-hour chart. And here you can see that the software has in fact already positioned the 20-week cycle trough diamonds below the low price on Saturday. That's because it is watching as price moves up above FLDs and VTLs to confirm the formation of the trough. The software is also applying the principle of synchronicity. And so although it does not have enough evidence for the 20-week cycle trough, or indeed the 80-day or the 40-day or probably even the 20-day, the fact that it has confirmed the shorter cycle troughs as having formed in the market is giving it the confidence to position these diamonds. On this chart we can also display the 5-day cycle FLD, and you can see that price is busy trying to get above that FLD. A very interesting FLD to watch in my opinion, particularly on the 1-hour chart, and I find it works very well with Bitcoin, is the 1-day FLD. So let's use the 1-day FLD to project what we are expecting if the 20-week cycle trough has formed. Here is our potential big magnitude cycle trough. The first interaction is an A category interaction, which you can see occurred at about midday yesterday. That provides us with a target to the upside, which I believe has now just been met. It might have only been met in the previous hour over there. The next interaction between price and the FLD is at the time that the one-day cycle trough forms in the market. You can see from this nest of lows that that one-day cycle trough was expected earlier today, and if we project that time upwards, it was expected at about this time. What do we expect from price and the interaction with the FLD at the time that that trough forms? We of course expect the FLD to provide support, and I think that you can see quite clearly that price didn't even quite reach down to that FLD. It very nearly did, but it didn't quite get down there, and so the FLD has effectively provided an approximate level of support. That would be our B category interaction. Currently, price is undergoing the C category interaction as it pulls up and away from that FLD. What are we expecting now? Here is a 5-day cycle peak. We are expecting price to reach up to that peak. Then it will cross below the FLD in a D category interaction on its way down to the 2-day cycle trough, which is expected sometime later tomorrow. Then, of course, we will get our E category interaction as price crosses above the FLD and reaches up towards this greater magnitude cycle peak. It might even form the 20-day cycle peak at that point, or perhaps only the 2-day cycle peak. Eventually, of course, we will get an F category interaction as price comes down. Then we'll get the GH category interaction where price finds resistance at the level of the 1-day FLD and comes down to form the 5-day cycle trough. By following that whole process over the next few days, you can form an understanding of the bullishness or continued bearishness of this market and be able to, with more confidence, confirm whether this was indeed the trough of the 20-week cycle or whether that trough of the 20-week cycle still lies ahead of us. I do hope that you found this market update useful and interesting. If you have any questions, please put them in the comments below the video. I look forward to hearing from you.